Welcome to another video of a top-down analysis on gold and the trades what we took live for our members on our trade and study. Okay, so let's jump straight into it. So before we even look for any trades at all, the first thing we do is a top-down analysis. Now, the top-down analysis is going to give a number of things. It's going to mainly give us the general bias for that day. Okay, it's going to tell us if it's created a top wick and now it's flipped to the downside, so we're looking for sells. It's going to give us a big picture of the story of what's going on. Okay, and then we go down to the lower time frames for setups. Okay, so let's do a top-down analysis. So if we start off with the monthly, now the previous month closed bullish, okay, which was here. So the previous month closed bullish, okay, back into the range. So technically the monthly should be coming to tap these levels, because that's what happened is the monthly tends to tap here, here, here. Right, so I would imagine sometime this month price starts pushing back up to tap these levels. Okay, now that's what I mean by tends. However, last month price actually closed below these levels. Right, so we were thinking then, okay, when's the next range? Where's the next range? So the next range for the monthly, because price broke here, you would imagine that this month would have pulled back and then flipped to the downside and starting to head down to fill the range of the month. However, we didn't get that. We closed back above into the range. So technically, we're now in this little range here. Okay, the monthly range. This is what we're in. It's only a small one. But because we've closed here, I would imagine this candle flipping sometime this month to tap 1991 level. Okay, so we are bullish on the monthly. So once we work out the monthly, we are bullish on the monthly, but we do know you can also get a steeper bottom wick on the monthly. The monthly can literally come and tap sort of these levels here, I would imagine. Why? Because you've got support there. And also, what you tend to get is, if I zoom in, if you notice how the wicks form, this candle has opened up, pulled back. And if it pulls back to about there, say, leaving us a wick, and then even if this candle flips to the upside, it's then going to leave us a wick here, and what you'll tend to get is these will sort of go in a line. See how you've got a wick, and then this would be another wick. Now you could also argue that, well, it's already done that. So if we get rid of this box now, yeah, and put a trend line from here, okay, I would imagine a steeper bottom wick from it. Now, until price breaks one of these wicks, so once price breaks lower here, that's a fair sign of price wanting to push down. But at the minute on the monthly, we haven't had it. All we've had is a break to the low, then we've had a fake out, back to the upside, so we should be coming to fill the range. And then if it breaks above, then you're pushing higher up. But if it closes respecting, then technically we're coming back down. Okay, so that's how the monthly is looking. Let's go down to the weekly. Now, the weekly one's interesting, okay, because what we found is with the weekly, there's a weekly support here, which we've tapped twice now. So you had one tap here, and you've had another tap here. So you've had two touches of it. Now, also what we've noticed is once you get a bearish close in around this area like this, you've technically closed back into the range. The next candle tends to drive. Okay, so we had a bearish close. Next candle drove all the way down. Next candle didn't quite make it all the way down, but did have a nice push. So technically, what we should do now is the weekly should open up, pull back, test the previous support, then flip to the downside, because the next range on the weekly is technically the low of here. as you can see, prices come down, come back up, and then come back down. So on the weekly time frame now, I would imagine that this weekly is heavily bearish and it comes to tap at least 1918.96 for this week. Bear in mind, I'm doing this video on a Monday, right? And we did catch some trades this morning, but that's what I'm expecting for this week. Okay. Now, another bit of reassurance what's happened with the weekly is this one has closed below here. So now pullback wise, all we need for a pullback is this weekly needs to come and tap previous support. Where's previous support? Well, I've just shown you. So previous support is this level here. So as the weekly's opened up, pulled back, tapped this area. So this should now start heading to the downside. Now, that's what tends to happen. Now, what could happen though is the weekly could also come back and tap 1965.49 if it wants to, and then flip to the downside. It can do that, but looking on the weekly, we should be coming down to tap 1918. So you've got to put the story together. We've done the monthly, which we know the monthly is bullish, but we know the monthly can pull back further, and that pullback further would be this area of 1919, which would make sense for the weekly, okay, to come down to tap. So if the weekly can still come down and tap even before it pushes back up to these ranges, okay. So now we are bearish on the weekly also, okay. So let's jump down to the daily, see what we see. Now the daily is a tricky one. The daily is closed bullish, okay. Now the thing with these zones is you could argue and say the daily broke out into the next range, or you could say this is a range and it's actually closed respecting. So it's a bit of a tricky one when this happens, right? Because you don't know if the daily is closed respecting or it's closed above the range. But this is where you've just got to go down to the lower time frames and confirm. We know the weekly's heavily bearish, and we know it wants to come down to fill that range. So if we go off that, now tonight when the markets close, if we can get a bearish close on this daily, that would be confirmation that the next daily then would drive. Therefore, that would be the weekly pushing down to tap that zone, which is down in these levels, 1907. Okay, but at the minute, down in these levels in 1933. But at the minute, it's a bit of a tricky one, the daily, because the daily could flip to the upside or could close bearish, because these zones, we don't know if that's the zone, therefore it would have broke out, or that's the zone, would have broke out, or is that one what it's respecting. Now, what we have seen though is this daily wick has not broke the previous wick, so that's a sign that price is still wanting to push down at the moment. However, this daily wick hasn't broke the previous wick of the previous day. So again, we're sort of in a bit of a, this daily can do anything at the moment, so we need to go down to the lower time frames to look for our trades, okay. And I'm going to explain how we caught our trades on TNS this morning. So that's a top down on the on gold at the moment. We are sort of bearish. We are probably looking to come down just because of that weekly time frame hasn't filled its full range at 1918 at the moment. So if we can get down to them levels by the end of this week, that'd be absolutely fantastic. So what happened with our trade this morning? So what we noticed is we had all time frames it broke to the low, which was fantastic. So the 4 hour was hovering to the low, to the downside. The 1 hour was hovering to the downside and broke out. We had a 30-minute, and this was a 15-minute break to the low, which you can see here. Now, what we noticed is when you get a 15-minute break to the low here, you always tap 1933.35, even if price wants to flip back up to the upside. So with us knowing this, we were happy to get sell stops after this 15-minute break, and we got a 15-minute pending sell stop onto the low. And then what we done, our stops were going off the 4 hour, because the 4 hour had already flipped to the downside. Okay, so the 4 hour had already flipped to the downside. So we had our stops up here above the 4 hour. So if it did want to sort of flip back up, we would get a chance to get out from the next 4 hour pulling back. Okay, so that's where we had stops. So it was about 40 pip stops on this at this point. So we were pretty happy with stops. We were pretty safe with it. So all time frames had broke. Now the reason we put the stop loss on the low of the bottom, because what tends to happen is when a new candle opens up, it can push down a tad. But if price wants to push back up, then it shouldn't be breaking the wick of the low of the previous candle. It should come near it, but then push back up. Okay. So we had our stops on below. We had a big enough range from here to here. I think it was about 11 pips, I believe. So that was our take partial move to break even area in and around these zones. So yeah, we got sell stops on this, and it didn't take us too long to get activated. As you can see, 30 seconds later, are we activated here? I said it doesn't take too long to get activated. There you go. This is where we get activated. So the 5s had come and tested the previous zones, and then this 5 here pushing through. You can see activates our trade. So we're in sells on this. Okay, we've got one trade open on this, and this is just a 15-minute breakout to the low. We know price tends to come down to tap 1933.35. Now what happened is price came down, activated us, didn't push to our target and pushed straight back up. And what we noticed is the next 15-minute had closed, and that was also the close of the 30-minute. And if you can see, this 30-minute closed with not much of a bottom wick. Okay, this is the moving candle, and this is the 30 what closed with not much of a bottom wick. So what tends to happen when when any candle closes with no bottom wick, the next one tends to close the opposite to what that candle is. So for example, this 30 minutes bearish, no bottom wick or not much of a bottom wick, so this one technically should close bullish. Okay, and that's a sign of price could start heading back up. So at this point, I didn't like the look of this, so we were sort of looking to manage risk. Now I also did identify a minor support in around 1934.00 on the 5-minute. So what I did is I moved take profit to move break even to there. Okay, however, my plan was to not take partial, but just to move to break even, so it's a risk-free trade first, and our target is still down in 1933.35. Okay, so we were just keeping an eye on this because we had no bottom wick. We really wanted to see where this next 30-minute candle was going to close. So what had happened, the 30 actually did pull back, and then the next 30 just came back down to create. So what you get is when you get two candles where neither of them have got a steep bottom wick, that means price is probably going to want to come back down to that area to create that wick for them candles. So price did actually reverse and still started to come back down on the 5 minutes. Now what I noticed, we had another 5 break to the low of that area. Okay, so what I decided to do at this point is, knowing that price comes down, if it came back down to that area, it's probably going to want to break the lows and likely to drive to a 1933.49. So I was actually happy to put a second position on this. So we had a second sell stop of the low of this 5. Okay, so we're thinking that it was just a 5-minute breakout of this, but it's back into this sort of area coming back down. So prices came back up, picked up liquidity from the top in order to drive, and that's what price has to do. In order for price to drive, it's got to come back, pick up, refuel if you like, in order for it to drive to the downside, and that's what sort of happened here. So again, I don't think this took us long to get there you go, it didn't take us long at all to activate it. So our target was the same, stops were the same at this moment, but at this point we've got 2 open trades on this. So this is just a 5-minute break to the low with a second entry to the downside. Now we also then got a 15-minute break to the low. So this is great for us because all time frames are breaking to the low. So you had a 1-hour breakout, 30-minute breakout, 15-minute breakout, and now 5-minute breakout. So everything's really nice for us. However, we do know that price can reject from that 1934 area, but it does tend to come down to tap it, probably 9 times out of 10. So we're still happy with this second trade. Okay. So again, we had an hour break to the low, and you can see where the hours pulled back, and it's now starting to flip to the downside. So this was the start of the flip to the downside. Now, once we got a 5-minute close to the low, we were just waiting for a 5-minute break to the low, and we're probably looking at price driving to the downside at this point. So there we go. As you can see, price is going into nice profit now. Now, I believe this is the 5-minute one what actually broke to the downside. All the candles were flipping. Again, strength was nice. So you're looking at strength was 62.4 going up. Gold was going up and struggling. It was just sort of stalling in and around this area. Now, I actually had to be somewhere today. So I sort of wanted to get out of this trade pretty quickly. But I was still adamant it was going to tap our 1933.49 because price was telling me that previous data tells me that that's where price tends to tap before rejecting or pushing straight through that zone. So as you can see, strength's nice. The arrow on gold's changed to the downside as well, so it's a good sign that price was driving. As you can see, we're just shy of sort of $500 at that point on these two trades for myself. Now, obviously, I did close out in full. This is where I closed out in full, near the minor support area. Now, price does tap there in the end for that day before pushing back up to the upside. But for me, I've been in this trade a bit too long. I had to be somewhere, so I just closed out in full in and around these areas. So I believe the first trade was about 11 pips. The other one was about 8 pips. So we're looking close to 20 pips out of these two entries for this day. So it was a great start for a Monday morning for us. A nice winning trade and a great start for the week, to be honest with you. Now, price does tap this area and then does start pushing back up. So it was fantastic where when you're seeing price, I'll see if I just speed this up. It does tend to tap this area and then see how price starts pushing back up. So it's just crazy how if you do your previous data spot on, right, and you work out your zone spot on, you know how candles move and when a new candle opens up, how it works. Everything just can be precision entering. Look, one little touch of our take profit, move to break even area, then price rejects straight from. And price does actually push back up and starts creating higher highs for the rest of the day. So 2 trades on TNS this morning. If you're interested in joining us trading live, we tend to do it daily, Monday to Friday from 8 AM UK time. Hit the link below, get joined up, and I'll be happy to trade with you. So thanks for watching, guys. Have a fantastic day.